Everybody, Dow's down 68 points right now. It's well off the lows when it was down more than 100 this morning. So about 0.2% declines for all the major averages. Quick look at the 10-year yield as well, by the way, does show yield sliding towards the lows of the session off their morning highs. So we have these two risk classes kind of going in different directions. Let's bring in Michael Yoshikami to discuss this more. He's founder and CEO of Destination Wealth Management. And Dagus Wright is with us as well. He is CEO of Decatur Capital Management and a CNBC contributor. It's great to have you both here. Dagus, let me just start with you. Thoughts on the 10-year on markets today. I don't want to overly tie this price action to what's going on in Afghanistan. I mean, that's a majorly difficult global issue where we have to just wait and see how it will be resolved, what the Biden administration is likely to say. And I guess in the meantime, that leaves us looking to Jackson Hole and the events and the likelihood to hear from Powell in the morning.
Yes, Kelly, first of all, my prayers are with our servicemen and women and their families. What we're seeing is that with the overall market, we're seeing the bumpiness and the market may have pulled back given the news of what happened in Afghanistan. And so, but if you notice, the market is actually up a little bit from the market lows today. So that means that the terrible thing that happened in Afghanistan is not having a significant impact on our markets. So we're seeing that this is still going to be a bumpy market. We've had a bumpy several weeks here. And so this is just a continuation of that volatility.
Yeah, and there's this push and pull between stay at home and reopening stocks. I know we've all been looking at that, Michael Yoshikami. I also thought that Dave Zervos made an interesting point a little while ago about the importance of the jobs report. September 3rd, we get the August number, that maybe that's the best way for now to tell whether, the demand side of the economy is losing momentum or not.
Yeah, it's going to be all about jobs, and then the jobs report is going to impact what the Federal Reserve is doing. The news coming out of Jackson Hole, I'm sure, will be continuing about reducing the tapering or reducing the buybacks and tapering out some of the intervention that the Fed has had in the market. So I think really it all comes down to inflation. What the Fed is going to do, and the jobs are a key factor in that equation.
Dagus, let me use a couple of the names today to illustrate this push and pull in the market. So you have, Zoom, the big classic stay-at-home trade, getting a big upgrade to outperform a $400 price target at Morgan Stanley. Williams-Sonoma has these amazing earnings. It's bringing back, again, kind of a stay-at-home play there. But Ulta also strong earnings beat, right? So, and this has been happening for the last few weeks now, where it's not a clear sort of sell the pandemic winners by the reopening trade. For a while, it seems it's almost as if they're both working.
Yeah, and Kelly, the reason why they're both working, if you go out to a store, to a sporting event, to a restaurant, those venues are still packed with individuals. Consumers are still spending. So the Delta variant may impact travel and leisure, but when you look at restaurants, retail, such as Ulta, you're seeing people within the stores. And so there may be a slight pullback due to the Delta variant, but we don't feel that this is going to stop. We definitely don't see that we're going to close down the economy again. So that's what we're seeing. We're seeing Zoom is going to continue because there's still a need for video conferencing. But we're also seeing Williams-Sonoma that's being driven by the millennials, and they're going to Pottery Barn to buy housewares. So everything is still working.
Yeah, and those housewares are more expensive than ever, Michael Yoshikami, and we have a lot of focus on prices, whether inflation is going to be persistent, sort of persistently rising, let's put it that way, or not. How much worse are these supply chain issues going to get now that Delta has been spreading again, and what that all means for corporate profit margins?
Yeah, all those are very good questions. I think though, Kelly, there's still lots of money in the economy, and consumers are, believe it or not, despite some of the sentiment readings, I think consumers are optimistic that when we have a third vaccine dose, a booster shot, that you're not going to see the economy closing down. Even what's happening in Hawaii, I mean, the governor's trying to convince people not to come to Hawaii, but has not completely shut down the economy. And so I think that consumers are more optimistic that we're not going back to where we were maybe a year ago. It's going to be ugly until we have children's vaccines, probably. But I think there's still some optimism, and I think that's why spending is still occurring.
Maybe first you, Michael, then to Dagus. What would your top picks be, either stocks, sectors, like for individuals, for investors right now, even as we're about to move through some major events with the taper and everything else going on?
Yeah, I think you bet on the consumer. I think that it's not a fluke. I think you have companies that are going to have really a strong continued footprint. These are going to be companies like Apple, certainly, is a consumer stock, even though people think it's a technology stock. Companies like Amazon is going to continue to thrive. Costco is going to continue to thrive. Every person needs to make a judgment what's best for them. But I think you want to bet on the consumer being economical, being selective in what they spend their money on, but they're going to spend their money.